So things are settling down one way or the other. So Infi, for example, is down about 6.33% now. So Tata Power, for example, is down about 4.75%. HDFC Bank is down 3. HDFC is down 3. Tech Mahindra is down 4. I'm just reading out what's down the most with the maximum volumes at this stage. Mindtree is down about 4%. Mindtree at about 39.27. Shriram Transport Finance is down about 5%. Bandhan Bank is down about 3.25%, 3.33%. Indiabulls Real Estate is down 4%. Indigo is down 3%. L&T Technology Services is down about 3%. Birla Soft, which had a bit of a sort of panicky moment early last week, is down 3%. There is IEX, which is down about 3%. KPIT Tech starts about 4% lower. Adani Transmission, and so on and so forth. But, I mean, volumes start to thin out. It's just still very, very early days right now. Adani Wilmar is up 2.5% again. It's got decent volumes. Actually, it's got very large volumes, by the way. 652 on Adani Wilmar. ONGC is reacting to that surge in oil prices. It's up 2. IIFL, which started to make a move on Wednesday, the last session. IIFL Finance, that is. It's up 3% more, 276. Thermax saw a very large move. Yeah, that's the one. IIFL, not wealth, but finance. And Thermax, which saw a very large move on Wednesday, it's up another 4% right now. So just kind of some of these are follow-up moves from the last session. UFO Movies is another one which saw a very large move on Wednesday. It's up 7.5%. NCC, Varun Beverages, and I can go down the list, but I mean, then volumes start to thin out a little bit. So this is the bulk of what's moving on the upside and downside at this stage. Andrew Holland is joining us right now. He's Chief Executive Officer, Avendus Capital Public Markets, Alternate Strategies. Of course, he's also the Market Master of the Day. Andrew, it's always a pleasure. Great to have you with us here. Thank you very much. I mean, you know, for someone running a long-short fund, this is your kind of a market, isn't it, Andrew? I mean, what is, I mean that in the sense that it's a lot more two-way price action and not just one way. But is it going to be more down than up? Or do you think the market will find a base somewhere here?
I'm not trying, I don't want to be too overly negative because I'm actually thinking more positively going forward. But I think, Prashant, what we're going to have to face at the moment is earnings downgrades across the board, across all sectors. I think the time has come now where companies are really not being able to pass on, you know, the kind of input prices that they're seeing, you know, they're taking a margin hit. And if you also get a demand slowdown as well because of that, because of higher prices, and the fact that we're having to spend, you know, more of our disposable income on other factors like food and energy, then you know, you will see that operational gearing work in reverse as well. So I think, you know, not just in India, but globally, we're going to see this, you know, big earnings downgrades over the next one quarter. And you know, the good news is though that you know, our view is that, you know, we're probably heading globally towards a kind of, you know, towards recession, particularly in Europe. That's definitely going to happen. That demand destruction will happen because of higher commodity prices, and therefore commodity prices will fall. I think it's probably more the metals which will fall first. Oil might be kind of you know, helped by the ongoing kind of, you know, Russia-Ukraine conflict. But the good news is that I think commodity prices, maybe over the summer months, will start to fall as one, China kind of reopens again and things become normalized there, and supply chain starts to ease up from where we are today. But unfortunately, I think the demand side of it's going to be very weak. And therefore commodity prices. So that's good news. So India will see, you know, GDP forecasts being brought down, but will kind of be the cleanest shirt in the kind of linen basket among all other countries globally. So that is the good news for India. So we will see, you know, flows come back to India probably, you know, from summer onwards. But you know, once all of this is over, Prashant, my more bullish view is that, you know, we will see a capex cycle pick up globally, particularly in those sectors, you know, where any country or company feels that, you know, security of supply is going to be paramount going forward. So I think that's where India will also play a key role, I think, going forward.
Okay, by the way, Tata Power is now down 6%. Andrew, good morning. Is that part of that optimism driven by what Cristiano Ronaldo did over the weekend? You know, you're smiling.
No, it's also the negative side of that is there's still the kind of fear of Liverpool winning a quadruple, which would be very disappointing. So that's why I'm hedging at the moment in terms of my more near-term negativity compared to optimism.
I think your cross-city rivals perhaps will make sure that at least the biggest one stays in Manchester. But Andrew, what about the overall sectoral view? This morning, the big talking point is what's happening to IT stocks after Infosys's margin miss and the guidance. Your thoughts on how to approach this space, which clearly has been the leadership pocket for last 3 years for markets?
Well, I think there's two headwinds for them. One is obviously the kind of pressures that you've seen from the Infosys results, and that's going to play out throughout the sector. The second is obviously the growth sectors of the US, the tech side of the US, is going to be hit as interest rates rise and tightening of the balance sheets. And really that just impacts the whole sector negatively. So I'm not overly negative on the IT sector. I think the time to buy will probably be soon, because I think it'll be played out over the next few months as interest rates rise in the US. And of course, I think we'll all be looking at companies with cash flows or cash on the balance sheet, and for those companies which can pay dividends. And obviously our IT will be able to do that more than some of the other sectors, which will suffer because of margin pressures. So I don't think it's time to buy right now, but I think the time could come over the next few months as some of these negatives play out in terms of earnings downgrades locally, and the sentiment against kind of growth stocks in the US impact the sentiment towards the IT sector in India.
Okay, by the way, the market sell-off has been arrested, at least for now. It's not gotten worse, at least for the Nifty, down about 270 odd points. Infosys is still down about 6%, but the other stock, HDFC Bank, is also under pressure. Andrew, good morning. What do you do with a stock like HDFC Bank now? In the sense, for the overall space, things have looked good, right? I mean, HDFC Bank still has best-in-class asset quality, less than 1.5%. Loan growth is very strong. Do you use these times as a buying opportunity?
I think, I think with the banking sector, I've been reasonably negative in the very short term. I think there's something playing out which is affecting the sector in more respects, in terms of the pressure that you're seeing in terms of competition, not just from the private banks themselves, but also the PSUs, and obviously the new kind of technology enabled sectors which are starting to eat away at the margin of the bank. So I still think there's a lot of pressure on the banks in the very short term. And again, there's been a leadership move across all the major banks, and I think the pecking order is going to change. I think the one thing that I would say is, obviously with the merger of HDFC and HDFC Bank, that's going to play a bigger role going forward. So we have to see how that plays out, and obviously whether the approvals come through. But what it told us was that this, for both sides, for the NBFC and the banking, there's pressure, and they need to get bigger to be able to kind of really kind of play into the growth of the Indian economy. So I think that's something which I think will play on the banks in the very short term, and I don't think it's time to be kind of bottom fishing right now, to be honest.
Andrew, which is the weakest link to your mind right now? I mean, which sector, which space do you think is the maximum downside?
I think the maximum downside, I'm going to actually kind of reverse that, because I think where I want to kind of focus is markets will maybe kind of head towards that 17,000 on Nifty, and I think that will be led by by the banking sector, initially probably IT as well, and those are heavyweights in the Nifty. But I think thereafter, and that's what I'm trying to look forward is rather than where we are at the moment, is to say, you know, which are the, you know, the sectors which will do well thereafter, and I think it's going to be capex led. So therefore, the banking sector will be, come back to favour at some point, but I just don't think it's yet. So I think it'll be the IT and the banking sector, and downgrades across the board, which will bring the index down. And that's still to come. We haven't seen downgrades at all yet, Prashant. So I think that's the weak link. The weak link is earnings, and the market's not factored that in yet. So when it does, that's going to be the opportunity. But you know, there's plenty of sectors out there which are going to continue to do well. For example, the travel industry. I think there's the change in our travel patterns, which is going to be a global factor. We're probably going to spend more time in our own countries, and therefore that's great for the hotel sector in India in particular, possibly also for the airline sector, but obviously that's hurt by the kind of higher oil prices at the moment. But those are the kind of sectors which I think will do well, and those which will kind of benefit from the capex cycle going forward.
Yeah, I mean, I could sense that over the long weekend, Andrew. Last question from my side, Andrew, and I don't know if there are any parallels. I remember the 2004 to 6 rate hike cycle, and the market here had a big boom. Of course, this time the starting point, the starting valuation could be different, but do you get a sense that perhaps a mini repeat of that is possible?
I'm not sure it's a mini repeat of that, because you rightly say 2004 the market was on a PE, if I remember, of about 8 or 9. So it is a different cycle that you're talking about, and obviously that coincided with a global cycle in terms of growth as well. But what I do think is this: I think that India will emerge from this as still the destination that investors will want to come back to. I think interest rates rising in India will happen probably June time, and that will also have an impact on kind of earnings as well. So once we're through this, I think that's going to be the time when you can really see the kind of long-term potential globally, because I think that global capex is going to be very, very significant. And if you just think about if the Russia-Ukraine conflict was to end at some point over the next kind of 3 to 6 months, there's a lot of obviously reconstruction and building that would have to be done there. So that will help that capex cycle as well in Europe. So that's what I think is going to be the new theme. But it's not going to be traditional companies and sectors. It's going to be new areas where security and supply security is going to be key. And I think India plays well into that going forward. So I think that's going to be the new themes which I think will play out. But I think overall, though, Anuj, I think we just have to be careful in the very short term because of the earnings downgrades. That's all I'm worried about.
Okay, earnings downgrades, so be careful in the shorter term. Thanks a lot for joining us, Andrew.